there's news that one of the listed brewers, international breweries, will unveil a new factory not significantly far, but a distance from where our headquarters is on Lagos Ibadan Highway. Here is going to be in Ogun State over the next couple of days, maybe next week. And then, of course, the dividend payment changing date by Zenith Bank. And, of course, we haven't really seen the numbers for Access Bank and one or two other top banks. So, do you think these are news that could be a game changer?
Unfortunately, these news have been in the market. International Breweries factory, we have already expected. We have priced in their Shagamu factory, and it is more of a ceremony, really. And the market has already priced that in. For the banks that haven't released, you see that about 2 Tier 1 banks are yet to release their results, UBA, Access, that should come out soon. But we do not, in terms of expectations for these results, we believe that they will be positive, but would they be positive enough to drive a change in sentiment? I do not think so. UBA particularly has lost significantly in the past couple of sessions, even on Monday as well. Investors may not necessarily see that the results are positive enough to, change the sentiment. We expect that the results will be good. In line with the trend that we have seen for the other banks, you see that irrespective of the lower interest income, non-interest income has been able to support the earnings of these companies. And particularly, you've also seen a moderation in the impairment losses that they have recorded, which has supported their bottom line ultimately. And they will also be reporting their interim dividend in line with the usual tradition. But across the other Tier 1 banks, you see that despite the release of these positive results, you have not seen markets change its stance and investors remain skittish, and we expect that to continue.
30 kobo, 35 kobo, 1 naira dividend from Stanbic, from these big banks, and you think the needle is not going to move any significantly?
No, we do not. We definitely do not think so. And on Monday, we also saw trading as well. We saw that for Zenith Guarantee, they both released dividend of about 30 kobo per share. On the same days they released their results, market did not move positively, even though when you look across markets, their reportings were better than what analysts had expected mostly. But investors continue to concentrate on things from the political angle as well as external developments. A lot of the external developments from the U.S. front in terms of the Federal Reserve hiking their rates and a stronger dollar have really made investors more risk onto the U.S. securities, let me say, and safer securities as opposed to riskier securities in Nigeria, even more so ahead of our elections.
So what's the outlook on next week, next Monday's GDP second quarter numbers? Even if it comes at a roaring figure, I don't know yet. Do you think the market will roar alongside the GDP on Monday?
Well, we do not think the figures will roar in for GDP figures. We expect about 1.6% growth rates for the Nigerian market for Q2 for the Q2 period. That's slightly lower than what we turned in Q1, which was about 2%. You've seen a lot of slow growth for agric, or slower than expected growth in the agric sector, and even in the oil and gas sector, which has been supporting the GDP figures for a while. When you talk to analysts, you see that real growth in the Nigerian market remains near negative territory, really, and there still remains a lot of recovery that we need, that the Nigerian market needs. So no, we do not expect a positive catalyst from the GDP figures that we expect to come out on Monday. Markets will welcome it, but nothing positive.
Welcome it on a macro level. But again, if you look at the sectors of the market, and we just dive back a little bit to the technical side and fundamentals, what is this insurance sector riding on week? Is it the technicals or fundamentals? What's the sentiment here?
What sector?
Insurance.
The insurance sector is one of the, I would say, better performing sectors on the exchange currently. I would not say it is anything fundamental, but generally investors have concentrated the risk of energy more on the First, the consumer goods sector, which has been is significantly down year to date. Last about 15% thereabouts. The industrial goods sector as well has seen a lot of risk of, irrespective of strong numbers from heavyweights like Dangote Cement, but banking sector slightly less negative, but the insurance sector has seen a more positive sector, nothing too fundamental, but risk of sentiment has been diverted towards the bigger sectors on the exchange.
I'm trying to find out, if you find out, let's know about what's driving, because almost on a daily basis, on Monday, the insurance sector was about 0.1% on the sector index, and it looks like almost on a daily basis, these folks seem to be trudging on while the frontline sectors or the headline grabbers,
other sectors,
yes, seem to lag.
Yes, absolutely.
Is it due to prices?
If there's anything fundamental really driving the sector.
Yes, so my apologies there for break. Is it the price that these insurance stocks are much lower, or the level of risk involved in terms of investor sentiments are not so negative in terms of a sell-off on insurance stocks like it is in more liquid assets like stocks like the banks and industrial goods?
I would not say that insurance stocks are, more of an investor's toast than the other sectors. Generally, you see that the large caps tend to get more joy, I would say, from investors. So fundamentally, they are not the stocks that tend to have more joy. However, it is very surprising that the trend in that sector has directly gone opposite to where the all-share index and the other sectors have gone. You will recall that at the earlier part of the year, there was a lot of regulation that affected stocks in that sector, and you saw a lot of insurance stocks, and I know we discussed this before, those penny stocks declined significantly from the 50 kobo level that they were before. But right now, you see that the sector is performing more positively than the other stocks.
Thank you very much. Thank you so much. That's today's market call with Ifedayo Oluokoroku from Vertiva, the equity strategist there. Let's take a break. We'll be right back. We're still sticking with the market. The first trading day after the holiday, isn't it?